Hello, this is Ahura, and we'll be with you to review the US inflation numbers and data and see how market can react. After a surprise that we had in the US labor market data just 2 days ago, and we had a nice tweet and post in the Truth Social by President Donald Trump, sounds like we should be ready for another hot tweet and post in the Truth Social. Inflation fell much more than expected by 0.2% monthly growth, which brought down the annual US inflation to 2.4%. Amazing number. The lowest in years. After that, we had inflation in the US in around 4.5 and 5%, down, down, down. And now, while the unemployment rate also is to 4.3%, and we had 130,000 newly created jobs, almost twice more than market expected. Now we can see that inflation also easing much faster than expected, and that can support the idea of the White House and administration there that they are supporting the idea of the rates cut, and that probably can support their idea, and that can increase the pressure on the central bank and the Fitcher Powell to cut the rates probably before he wants to leave the position. Anyhow, on the annual scale, inflation fell to 2.4%, while the core inflation also is to 2.5%, but it was in line with market expectations with only 0.3% monthly growth, which that one also was in line with expectations. Generally, these numbers telling us that while the inflation is under control and easing, the core inflation, without, excluding the oil and energy prices, still there are some doubts there. The most reason is because the higher price for the service sector. The headline inflation is mostly because of the lower price of oil that we had during the January, but at the end of the January, those days, these numbers are for the first 3 weeks. The last days, probably because that after the geopolitical tensions increase and the inflation in the oil price increase, it can affect the February numbers. However, that's why the market, while trying to have some positive and optimistic reaction to these numbers, at the same time, they should be more cautious, as always we say in Persian, there is a word we say that with the one flower you cannot say that is the spring. So that's just the one flower we have right now so far on the table, and we have to wait a little bit more and see what we can have in the next months. So far, the inflation is under control. Better to say, much closer to central bank's 2% target. Let's see how that affect the market. Look, just before these numbers, we had, if you remember, a few days ago when we talked, the percentage or the possibility of holding the current rate increased to around 94%. But now you can see holding the current rate is down, the possibility of that, by the FedWatch tools, by semi-group FedWatch tools, to 90%, which means now the market is moving. Still there is no doubt, more than 90% chance of holding the current rate, and we can say there is almost no doubt that Federal Reserve will hold the rate in its next meeting as well. But at the same time, we can say at least there is some dovish ideas around just like inflation and economic growth. So while economic growth, and you can see just like the numbers, if you review the numbers, what does it mean? PMI numbers for the service sector, 52 point some. PMI numbers for the manufacturing sector, 51, 52, somewhere around that. Fine, which we can say that economic development is fine. At the same time, unemployment rate fell to 4.3%, inflation fell to 2.4%. All these numbers together says that while inflation is somehow under control, we shouldn't be worried about the labor market. We shouldn't be worried too much about economic growth as well. Let's go to the chart and see with these numbers now what we can expect from the charts. We can start the charts with the US dollar probably. Let's start with the dollar index and see that's the dollar index. You can see here the dollar index. For sure, when you are talking about the rate cut and the more possibility of the dovish policies, so it's negative for the US dollar and negative for the rates. That's why these numbers will hold the dollar index from moving much faster forward above 97. That's why most probably we will have the dollar index limited around 97, 96 some, 97. Even if it goes around above 97, it will be 97.5, 97.10, but not towards 98. That's what we are expecting for dollar index. However, we cannot say that these numbers will put the pressure too much on the dollar index because the numbers also were not too much dovish as well. There are like core inflation was in line with market expectation. At the same time, as mentioned earlier, it's the first time we can see inflation in these levels, and we should give it time and see that if that can happen again, or in February we will have another again lower inflation numbers or not. With one number in just like with one time seeing inflation in these low levels, we cannot trust too much to see that that's the trend and that's what's going to happen. Weaker dollar will for sure can support the gold price. That's why you can see the gold price is slightly increasing. Same thing you can say for the silver. The silver, yeah, just like the first reaction up and down, but generally these numbers with the weaker US dollar, that can be positive for the silver and the gold. At the same time, as for stock markets, these numbers can generally slow down the overall uptrend. Look, they are not such just like we cannot say that these inflation numbers they were such a great number that now we can say that okay, it's going to change the Federal Reserve policy and they're going to cut the rates. That's why the stock markets can increase. No, but at least they are slightly they can just somehow softer the idea of more hawkish policies. Now we can say okay, there is some dovish idea also can come on the table. That's why it can softer the current downtrend that we saw in the market. So we say that okay, the S&P 500 or Nasdaq or Dow Jones, we can say okay, they will not most probably they will not fall much more, at least these days, and these numbers can somehow soften the downtrend and stay around these numbers, or even if the overall the overall trend that right now the trend is a down in the stock market, mostly because of the concerns that we have around the tech companies and around the AI based companies, AI based stocks. But with these numbers, at least we can say okay, for now we can expect the downtrend to slightly stay around these numbers, around these levels, and wait for more sign, for more signal to see okay what we can do next and what we can do after that. So generally, these numbers are somehow is negative for the US dollar index, but not much. It cannot. I mean, it's in very short words, it will slow down the US dollar uptrend and be limited around 97. It can be somehow positive for gold and silver. And it can be somehow positive for stock markets, but in this meaning that can slow down the overall downtrend that we have right now in the markets. And maybe if we have more signals that can support the bulls also. But for now, these numbers are good enough to say that okay, they can slow down the downtrend. As for the cryptocurrencies, the Bitcoin also same as the stock markets. I can say that these numbers are not. I mean, as for inflation, if you look at just inflation numbers that we had, they were not such a good numbers that we say okay, that can change the market trend. But at least we can say these numbers are the numbers that they can slow down the downtrend and they can somehow keep the prices around these levels. But for any further trend, Bitcoin and other cryptocurrencies, they will need more signal. First, for now, it can somehow the positive, can say somehow slightly positive for the cryptocurrency market as well. That was what we saw in the US inflation data and what we can expect from the market as their reaction. Have a good time. Bye-bye.